Okay, another request here for looking at journalizing investment transactions. So, what we have here is ABC Company completed the following investment transactions during 2018 and 2019. On December 6th, they purchased 2,500 shares of DEF Company stock at a price of $24 per share, intending to sell next month. They have no influence. On 12/23 of 18, they received a cash dividend of $1.50 per share on the DEF stock. On 12/31, they adjusted the DDA investment to its market value of $11 per share. And the next month, on January 27th, 2019, they sold the DEF stock for $18.20 a share. So the first thing we're going to do here is we need to journalize these transactions. So we're thinking about this. First of all, there's no influence, so we don't even have 20% ownership in this company, and we are intending to sell next month. So this is just basically an equity investment. Remember, with equity investments, we only really have to worry about certain things if we have over 20% ownership in the company or hold over 20% of voting stock. So in this case, on 12/6 of 18, what we would have here, we would have a debit to equity investments for $24 a share times 2,500 shares is $60,000. And we're paying cash for this, so our credit to cash will be for $60,000. The next thing we see is on 12/23, we receive a cash dividend. So 12/23 of 18, what we received, well, received cash here, and the amount would be $1.50 per share. So if we have 2,500 shares times 1.5, that's $37.50. So we received cash of $3,750, and this is dividend revenue. Dividend revenue of $3,750. On 12/31, we're adjusting the value of this holding because we have an unrealized loss here. We know it's a loss because the amount of the share at $11 is less than the 24 we paid for it. So essentially, we're looking at an unrealized holding loss on equity. Now, our loss is going to be the difference between what the value is now and what we paid for it. So we had 2,500 shares times, let's see, it's currently at $11, means 25,027.5 is the current value. So if we take the difference between that and what we paid for it, 60,000 minus the 27.5, $32,500. So what we're going to have is we're going to look at this as, right now we have an unrealized loss, which means we really, when we have an unrealized loss, it just means we haven't sold the equity yet. And then we would have a fair value adjustment on our equity investments, and we'll credit that 32.5. Now, on 1/27, we sold this stock for $18.20 a share, so 1/27/19. Well, we sold it for $18.20 a share. And we had 2,500 shares. 2,500 times 18.2. That means we received cash in a value of $45,500. So debit cash for the cash we received, the 45.5, and then since we sold the equity investment, we have to get that off our books, so we're going to credit that. So we'll credit equity investments for the 60,000, the value that we paid. And the difference between the two, since it's on the debit side, is a loss. And we can also think about it because the value now is 1820, but when we bought it, it was 24. We're selling it for less than we bought it for. So we have a loss on sale or disposal of $14,500. So this is journalizing everything that happened here from an accounting perspective. There's another part of this, which if we're looking at this at the end of the year when we prepare a balance sheet, how are we going to essentially how are we going to classify this, and what value would it be reported? So basically, we're going to report this at the value at the end of the year. Remember, we had this unrealized holding loss, and we saw that that was the value. So the 27.5 is the value at the end of the year. So that's what we're going to report it as. We're going to report it at $27,500. That's the fair value. This is fair value. And it'll be classified as a current asset. So I hope this helps a little bit with classifying and accounting, journalizing equity investments. I will see you next time.